Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, March the 7th, and the year's 2019. Let's talk trading. How to trade like a pro. Back to basics. There's a viewer who basically posted the same comment a couple of times on my videos saying that, I post videos every other day. I've got too many videos, and he wants me to, I guess, get back to the basics of how to trade this complicated system. Now, there's so much in there. I told him that, I upload videos 6 days a week usually, starting on Sunday, which in part of the world it's Monday, but the market opens here in the US of A Sunday. So the only day of the week I don't post is Saturday because the market's closed. And actually, I kind of like to take a day away from the computer. So that takes care of that. Now, complicated system. I think he was referring to, some of my screens have the dashboard on the right-hand side, and I guess that looks complicated to him. But let's talk about going back to the basics. I mean, I'm sure you've probably either watched my video or read it. My one page, all you need to know about trading, um, where I just pretty much simplify everything, and that's it. You can call it a trading hack. Maybe that's what I should call it, a trading hack, and maybe it will go viral, since that, life hacks and all these different hacks, that's the word, I guess, that the kids are all using. Um, but the funny thing about hacks is somebody looking for a hack is saying, make it real easy on me because I don't want to put any time or effort into it. I just want the result and I want it now. I want it immediate. But, not everything works that way. Um, Exercise. Give me an exercise hack. So, I do it once and I've got muscles like Arnold. I mean, some things, are just silly when you think about it. But, when it comes to trading, the basics, price goes up and down. You either buy or you sell. You either make a profit or you take a loss. I mean, everything is a lot of times it's binary. Sometimes it's tertiary, where you're either in a trade, you enter a trade, then you wait, you exit a trade, then you wait for your next entry. I mean, you're constantly going, most of the time spent in the wait state. It really is. I mean, it doesn't take long, a double click of the mouse or a click of the mouse gets you in and out of a trade. That's what, less than a second? All the other time is spent waiting. Basics. Price goes up, price goes down. Price makes a high, price retraces off that high. Price makes a low, it retraces off that low. That's just basic stuff. If you have a horizontal line and price is moving up to the line, well, usually smart money says buy. If it's moving down to a line, smart money says sell. Now, of course, there might be some exceptions, but usually, that's the rule of thumb. And basics, money and risk management. I talked about the three-legged stool, and that was the video that the trader commented on. And so, I'm kind of making this video to answer this person's question because there might be other people think the same way. They might think this is complicated. But since I wrote it, of course it looks simple. But every day we can see at the beginning of the week, price entered the upper wick zone, exited. Now we know price likes to exit the wick zone. I've already run the frequency distributions on it, the statistics, and there's a video that talks about it. And then you can see here it entered and exited that lower wick zone of the previous week, but it really wasn't much of a wick. You got the price. That's simple. That's the current price. The spread. That's the current spread. 1.5 pips between the ask and the bid. Now 1.6. Close minus open. Same as here. We just want to know how far is the close away from the weekly open price. And then the gap. It's all the gaps for the week have been filled. So when the market opens on Sunday/Monday from the Friday close, there's usually a difference between the Friday close price and the Monday open price. And that difference is the gap, and that gap usually fills. Wick, daily, weekly, and then an inside bar. So you can see here it crossed below the lower wick zone. So you just have to know what these codes mean. So, maybe this looks complicated to some people, but if you get that indicator and then you read and you watch the videos on the different functions, because there's 100 and some functions. I think it's 114 or 17. I have to look in the indicator to be sure. But that's what this is. And somebody else was asking about, do I have an indicator that shows breakouts? I go, yeah, you can use the dashboard to show these breakouts. Let's see. Go here. There's a bunch of different breakouts. There's a breakout bars, breakout box, breakout day, breakout time. So there's a bunch of different breakouts you can do. And, these are all the different functions. So you can set, the dashboard up to your liking. So now we look at the year to date, and we can see here that the euro yen is now 6 pips below the yearly open. It had moved up, but you can see we've had a retrace at 216 pips off that high. And you see once again it opened below the daily midpoint, crossed above, and then came right back below. So once again, the daily midpoint can be a very strong trade, but you can see here some days, if you're doing a midpoint crossover, you don't get to trade. And you know what? That's okay. It really is. Means you're not losing any money, right? And once again, we've got the dashboard. High to close on the year, close to low on the year. So how far is the close above the low of the year? Right there. 680 pips. Because the low of the year is where? That says 179. I wonder if I got a bug in there. I'll have to double check. 677, 178. I'll have to take a look at that. And if I do, I'll have to send out an update to everybody. It's kind of bugging me now. We'll definitely have to look at that. And here we've got the price. You see it dropped below the open of March, first day. And now we're below the yearly open or the January open, but we're still above the February. And we're putting in a 1 ball on the daily. And here you can see we're entering the range of January and the range of February day 1. And inside bar, once again, he said you might think this is complicated when it's really very simple. It's just, most things, if you don't know what you're looking at, it's complicated. But then when somebody explains it to you, oh yeah, that's simple, that's easy, I got it. Inside bars, once again, we like taking those daily inside bar trades. There was a short triggered at 25.71, good for 39, 38 pips. I mean, I show you this stuff every day, whether or not you choose to trade any one of these, but they're simple. Okay, I show you a lot of different trades. Somebody might like the inside bar, somebody else might not like the inside bar. So I give you the different options. But each one is simple. Once again, we've got a break of the previous day's low. We also have 114 pip range, and we've got 4, 8 over 100. Once again, simple. Range, high minus low. What's the current range? Okay. And these are horizontal line trades. And what does that mean? That means pretty much we have a level, and that level doesn't change usually. And we trade whichever way price is moving at the line. So I like to use the H1. So you can see here, this was the H1 highest open for the daily right there. You see price went above it, but then it crossed below. We always want to trade back to the daily open. So towards the daily open. So you can see here, there was the high, and it fell down right there. And see here, gave another chance, get in for a short. Now we've got the H1 lowest open for the month, and obviously for the day and the week. So right there, Larry live trade triggering long. And here we have the buy zone. And the pivot point was right at the open, so there's definitely no bias. Barely touched, not even really a trigger right here, unless you were just gunning for it. And then price came through here. You see there's a couple of shorts, but not much happening during the Asian or New Zealand, Australian, and Asian session. Wasn't until London and the boys in New York kicked in where you've got a nice short. And once again, close to the open, close to the pivot point, close to the VWAP, the volume weighted average price, which is right here. And normally this is a squiggly, but I don't like squigglies, and I don't care about where it was. I only care about where it is. And this is where it is right now. And we've got a nice rat trade getting ready to set up. You see here we're on M15, the rat zone. So we let this bar close in about 8 minutes. And then you would take whatever the high is. Or if you want to, you could just jump in right here. That's if you wanted to, because that was your lowest open, your H1 lowest open, which is also M15 lowest open. You could take the trade off of that because you see it tested and turned around. So it looks like price could be going up from here. Once again, that's a Larry live trade rather than a Harry hindsight trade. And we missed the pivot, and you see here, actually no, we didn't miss the pivot, I'm sorry. The pivot was right at the open. See all these lines overriding each other. And there we are. Yesterday we had a missed pivot, so we're 118 pips away, so it's going to be interesting to see what happens there. And 3 ball, green at the line, Larry live trade right here.